Welcome back, traders. So, after yesterday's doji pause at those lofty levels we broke down, markets dumped today, with bears definitely on the offensive.
Yeah, quite the turnaround.
But that final hour buying spree left some, well, intriguing wicks worth watching, for clues on tomorrow's direction.
Absolutely. Those wicks tell a story.
And with existing home sales hitting the calendar and the shutdown still in play, volatility's not letting up anytime soon. You're tuned into the Stock Market Summary Series. And as you guys know, none of this is buying or selling advice. We're just here to provide market commentary and education. But nothing we say here is financial advice. Okay, let's get into it.
Right. So today was really a textbook test of resilience, as you mentioned. Bears were aggressive. They successfully defended that swing high resistance we talked about last week. That led to a pretty broad sell-off across the major indices.
Okay, what were the numbers looking like?
Well, the S&P 500 ETF, SPY, it dropped 0.52%. The tech-heavy NASDAQ, QQQ, got hit harder, down almost 1%, 0.96% to be exact. DIA was off 0.73%, and small caps, the IWM, really lagged significantly, falling 1.48%.
Ouch. But what's fascinating here, I think, is the market's response to that sell-off. Those noticeable downside wicks you see on the SPY and QQQ chart.
Sure, from that final hour put.
Exactly. Aggressive buying came in. Now, if those dips were met with decent volume, that signals institutions might be actively defending a specific price floor, right?
Right. That's the interpretation. It suggests that even below resistance, there's some strong accumulation possibly occurring. It marks a key level for bulls to watch tomorrow.
So not just noise.
Not just noise, potentially. While the overall picture was red, industrials, XLI led the way down, dropping 1.3%.
Okay.
We had a strong outlier. Energy, XLE, completely defied the trend, led all sectors with a 1.28% jump.
Huh. That is unusual given the broad weakness.
Very unusual.
So, given that late buying, where did buyers choose to step in? Let's look at the watch list. I noticed PLTR sold off hard today.
It did.
But bounced precisely off the daily trend line. How reliable is a signal like that in this kind of volatility?
Well, it's crucial because it validates precise technical methods. That trend line wasn't just some arbitrary line. It was the major support holding the recent up move.
Right.
The immediate bounce tells us market participants respect that line for entry. We're also tracking OSCR. It continues to consolidate. In a classic ascending triangle below $24. That's an excellent setup for an educational pattern study. And Davey is still coiled up in that weekly bull flag, sort of battling daily resistance.
Okay, gotcha. And the most critical chart right now has to be NVDA, doesn't it?
Oh, absolutely. It's contending with a really key support trend line, closed just below it today.
Oof.
Yeah, the implication is significant. If we see follow-through selling tomorrow, the next major support zone is, well, substantially lower.
And this is exactly why, during these intense tests, avoiding those emotional exits is so crucial, right?
Couldn't agree more. That kind of disciplined risk management where you stick strictly to your plan, your levels, that's exactly the kind of foundational wisdom, frankly, that our Grok Trade mentorship program really drills down on.
It really pays off in moments like these. Okay, quick pause here. As always, guys, if you've got a stock you're watching or maybe a question about the markets, drop it in the comments. We might cover it in an upcoming episode.
Yeah, we love hearing from you.
And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free. It helps us out in a big way. And click subscribe, too, so you don't miss a beat. You can always unsubscribe later.
All right, shifting gears a bit to context. The government shutdown, dragging into its 22nd day. It's creating a bit of a sentiment fog, you could say.
How so?
Well, we're missing some key government data releases that usually help dictate market direction. So the focus stays primarily on the technicals, on the charts themselves.
Makes sense.
Tomorrow, however, we do get U.S. existing home sales. That could definitely inject some volatility.
Okay, something to watch. And what's the reading on alternative assets? Crypto, metals?
Mixed, but intriguing. Bitcoin slipped another 0.35%. What's critical there is that it's etching a clear daily downtrend. Now, lower highs, lower lows. Yeah, makes it structurally vulnerable for maybe a deeper correction. Metals were, well, indecisive. Gold, GLD, it bounced strongly off its 20-day moving average after running down to it.
Okay.
That suggests profit takers were met by immediate fresh demand. Silver, SLV, edged up just 0.21%, but it was on a wide range candle, suggesting some direction probing, perhaps.
Interesting dynamics there. So today's market, marked by that sharp bear defaults, but also that textbook PLTR trend line bounce. It perfectly illustrates the value of precise analysis, doesn't it?
It really does.
And this is exactly why the Grok Trade mentorship focuses so heavily on hands-on pattern spotting, mastering those trendline techniques, and of course, disciplined risk strategies. We're really confident in our process. Our coaches stick with learners until they recoup their investment and, more importantly, start building consistent wins.
Right. So summing up, today marked bears reclaiming control at resistance. But that persistent late buying strongly signals support is building beneath the surface.
The tug of war.
Exactly. And for the final thought, will NVDA successfully hold that critical trend line, or will it crack further, potentially opening the door for larger losses? And, how does that potential outcome stack against the indecision marked by yesterday's dojis we mentioned last week? Something to think about. Have a great rest of the day, everyone.
Yeah, trade safe.
And we'll catch you in tomorrow's market summary.